markets as well. So we've had a jolt of volatility, which for us as traders is obviously a very nice thing. So not so nice if you were long the equities going into Friday, obviously, but the fact that there's a bit more two-way action, a bit more movement, that opens up more opportunities. So we're definitely going to talk about those indices, but I will follow my normal path of discussion here. There was definitely some moves in the dollar more recently, so we'll talk about those FX indices and then commodities at the end. And if there are any questions you have, please shoot them through to me. I'm going to stop the webcam here and we'll jump straight through to the charts. Okay, so starting with the euro, this is a weekly chart, so just to give us a little bit of bearing. So there was a bit of a rally in the dollar alongside those rallying yields on Friday after that non-farm payrolls data. So some evidence of maybe a bit of a bottom in the dollar. Obviously, we're looking at a euro-dollar chart here, and the dollar's been selling off. Obviously, the euro's been seeing a fair bit amount of strength, and that's particularly been the case at the start of the year. We've seen a bit of a breakout here, but we've come up to this 125 level, which is a big round number, and it's one that does have some sort of bearing for the euro. 130, I would say, is probably the classic level in the euro that a lot of people consider a kind of benchmark level, but 125 is obviously the big 5 handle before that. And you can see that over here in the past, it did stimmy this big decline on a weekly basis. It did take a bit of jostling to get through there before the euro really sold off in 2000, sort of late 2014 and into 15. So we're coming back into old resistance, basically. And so hence we're seeing a bit of a pause. But I would say, especially relative to some of the other major currency pairs, the euro fared fairly well. And I would say that last week's candle was a pretty bullish candle. We just ended off the highs with that bullish move in the dollar, but not considerably so. We're kind of edged up a bit again since Sunday. So we're well into kind of bullish territory on a weekly RSI. If we scroll down to the daily now, it's more the kind of business end of things, you can see we obviously had that big reversal on the first test of 125, and then this is Friday's action, which is fairly minimal in the scheme of things when you compare to what happened in US equities, for example, where there was a massive sell-off. In the euro, we didn't really witness that. Now, for me, probably one of the biggest areas of concern is that we've been grinding up against this level of in the overbought area for a while now. And it does seem like the momentum can't push through this sort of rising trend line support to see some sort of major breakout in momentum. And so maybe we need a little pullback here, or at least some sideways action before we can push higher again. That seems quite feasible. A decent line in the sand will just be where we had this kind of tweezer bottom here, which is in around the 123.50 level. That's basically our support at the moment. For me, at the moment, it looks like that level could quite likely hold if we got another test. But obviously, we've been down there sort of once, almost twice, so third time, potentially not so lucky. I think we just have to keep in mind that the weekly candlestick still looks strong, and we're still generally in an uptrend. So the best trades still working out to me are going to be the long trades, but it's not to say that we can't get a pullback down to 121 first, is where we saw this major weekly breakout, because we never really got that retest. We just burst above it, and now we've hit 125, and there's a chance we do give up another 400 pips again. It's possible. For me, it's not the default assumption at the moment. But if we switch gears to the pound and look at this weekly chart, it does look a little bit softer. We still closed in the upper half of the week. But if you look on the daily chart, it does look like a bit of a head and shoulders reversal taking place here in an overbought area. The most overbought, I mean, it's the first time we've been overbought on a weekly basis for the pound since, where are we over here? Yes, since 2014. So, I mean, that's quite significant. The pound's obviously been on quite the rally. And again, there's a lot of psychological resistance up here for the pound, because we're pretty much this 143, and we're just a handle or two down, really, not much more than that from basically the the night of Brexit. You know, this is obviously the Brexit week. We fired higher overnight and then gave up the gains once the vote came in. So anyone who was long the pound on Brexit night, you can imagine they've suffered a fair bit holding on all this time, and now we're getting back to break-even levels for some of these traders who are relieved and are cashing in. And so that's why there's a fair bit of psychological resistance, and why we said in our quarterly report that actually the 140 handle could cause a bit of resistance. And we've actually popped quite well through 140. We're up at 143, but whether it can actually push much higher than this is open to debate. Obviously, there is some quite clear-cut resistance through these old highs, which is up here more 146.50 to 147. So were we to make another leg high, we can get up to those levels. That would be the next objective. But it seems when we get down to this daily chart that a double top does seem to be in motion here. And so we've got extra support for that double top by this bearish engulfing candlestick pattern here on the daily chart, which happened at the old resistance, basically below the 143 level. And what we've seen today is that we've popped up. We had an initial decent start, but we basically, if you pull down to a slightly lower time frame, you can see it better. You know, this was the little leg of support. We broke down through it. We came out to retest, didn't quite even make it. Now we're down at new lows for the day. So it's all looking a little bit soft in sterling, but we're basically still above the 140 level. And I think that's the level that everyone's watching. If we give that up, maybe we can hold up at 139.50, which are these old highs here. Again, the trend is generally bullish. We're above the 50 level on the RSI. But if there is a double top, then it would suggest that probably we're heading down somewhere towards 136. And these peaks here, or this level here, which is where we had the you know, more of a kind of clear-cut breakout. So again, out to the weekly chart, it wouldn't be unreasonable after a decent run-up like this that we put in a little double top and we pull down to test one of these levels down here. Now, it depends on your trading strategy whether you want to ride that move down or just wait for one of these supports to hold to try and re-enter this trade in expectation and maybe retest the high, or we get up to that 147, 147.50 area. Moving swiftly onto dollar yen, probably saw some of the biggest moves, and it was something we referenced in last week's webinar, where if there is going to be some sort of reversal, it was most likely in this dollar yen, just because we're in a range trading environment. So this low down here, basically around 108, has held as support again, and we're pushing off that support. So to me, it's you know, we're not in any obvious weekly trend. We're pretty much in a sideways movement. So my expectation is if we do get a pullback down to either where we got the breakout through this little kind of mini tweezer top pattern down here, so that comes in around 109.20, I think, or maybe you just pay attention to the round numbers, so more aggressively 109.50, we've almost got to now, or 109. Pick your level, but somewhere in that vicinity, it seems quite possible that we can then turn around again for another push to the top side and further back into the trading range. Obviously, this previous low acted as support here, so again we may face the same thing with this previous low over at basically 111. Could prove to be resistance on the next leg up. But it seems quite reasonable to me that we'd just try and make another run towards the top of the trading range. Switching gears to equities now, and this is where we basically gave away our breakout level in the FTSE 100. I mean, this was one of the criteria for us being bullish on the UK 100, was it holding the 7600 breakout level, because this all looked quite positive. It came down for the retest, successful. If I zoom in a bit, you can see on the first attempt, rebounded off the breakout level, looking all good, and then it's obviously nosedived as of last week. And then we're getting a pretty soft start today, and we find ourselves right on this rising trend line here. So potentially here, right at a kind of fairly critical level for whether this uptrend holds in UK equities. we're in a sort of triangle pattern of types. And so if the rising trend line here connecting these lows gives way, even on a, probably on, you need to be on a daily basis, you pay attention to this, then we're probably looking at a larger correction down to where we had the resistance and where we had that retest. Down at about 6,500 was obviously kind of the round number. That's what we're potentially looking at here. Obviously that would be a fairly decent move, and we are below the 20-week moving average. We are below the 50 level on the weekly RSI. So there's some bearish indications here. We haven't quite made it happen yet. There will be some people looking for value down here, hoping that sell-off last week was just a fleeting sell-off, because it has been on most occasions last year. But to me, this trend line will be the one to watch if we get a close through there. So on a daily basis, you can see we're kind of bouncing off it at the moment. If we close through there, that would open up a bit more chance of a bigger downswing. But obviously, it's been a pretty drastic sell-off. So it's difficult to sell at the end of a move like that, you know. So it's the chance of recovery seems decent, either at the trend line or at these lows down here, 7 to 80. It seems quite possible that we can get a rebound from here. But for me, it looks like the trend has turned lower. So if you are buying into this rebound, just be aware that it probably can't go too far. Switching gears to Wall Street. So this is the weekly chart. I mean, it's definitely a more bearish-looking weekly candlestick than we've seen for a while. And obviously, this gap open down here, definitely looking fairly soft compared to recent experience. I think you have to go back to almost the same time, almost 2 years ago. You'd have to go back to see something quite as dramatic as this on a weekly basis. So there does seem to have been a bit of a shift here. The sentiment just got too extreme. We had really strong gains in January, and the profit taking started to set in. So that said, we're still above the weekly moving average. So the expectation is the trend should continue at some point, but obviously on a daily basis, we've dropped straight through our 20-day moving average. We're down through the 50 level on the RSI. So at the moment, it looks more like a sell the bounce scenario than a buy the dip. On the short-term horizon, we're basically trending lower, as I see it, on the short term. So we crashed straight through that 25,700, which we outlined as a first area of potential support. These little consolidation area at the moment seems to be giving way as we speak. So the next area you'd look at would be down at this 24,880, which is where we saw the top of this consolidation. And then you might see the chance of a slightly bigger pullback. But I think still we're looking for sort of further downside opportunities, that being a first target, and then just you can see here that this was the peak. We break through it, we had a retest, and we pushed higher. So again, if we get down to these levels, 24,500 basically, which is a nice round number to be dealing with and potentially targeting on the downside. So, what's the summary here in terms of these equity markets? I think the short-term trend has turned lower, but we're still quite comfortably in a long-term uptrend. So, you can't ever know how long this short-term downtrend is going to last. But if you see some breakouts to the downside, or if you see some pullbacks to what areas that you imagine to be resistance, as I've outlined here, then they, to me, seem like the best opportunities. Switching gears to the DAX, and we had highlighted how there seemed to be a bit of a double top taking place here in the DAX, and so we have dropped through the support now at the 12,800 level, and so it is looking pretty soft in German equities, like other areas. But the fact that we've taken out such an obvious area of support at the 12,800 makes it quite an obvious resistance, and it just seems fairly likely now that we're going to come and retest these lows, which is still a fair distance away from where we are, around the 11,900. So I'm very reticent to kind of target these downside levels in what has been such a bullish market, but in Europe it's not been quite so clear-cut. We've obviously had periods like this, so it's not been quite so one directional as what we've seen in the US. So you can be a bit more confident about targeting the downside. I've drawn this line in, I don't know why or how it disappeared, but this is kind of what we're dealing with at the moment. We've broken through that short-term resistance, and we had that breakout which failed once. Is it going to fail again to hold through this kind of big level here? Basically sort of 12,500 is the kind of round number to deal with. So, you know, we were looking at that big, you know, we rounded out. We had the big breakout, which was positive. Didn't quite sustain it the first time. Pushed breakdown again, double top, and now we're back at this level. And if we don't hold it for the second time, then it, you know, people may start to give up, and then it opens a lot of downside down here for you know, a bigger pullback. So these are just the possibilities here, and hopefully we do get a decent, strong downtrend, because you know, you can ride that, and it gives minimal pullbacks, but if you hold on to it, then it ends up being a large move. Gold is, so this is the weekly chart for gold. We're moving on to metals here. This has been disappointing for me. I mean, I was looking for a break to the top side, but it's been hesitating. Obviously a bit of a resurgence in the dollar's not helped, and you would think, given the lack of risk appetite in equities, that would be a good thing for gold. But actually, more, you know, the reason we got a sell-off in equities is that we're looking at more, potentially more rate hikes and higher yields, and that is not a good environment for gold. Obviously, it doesn't yield anything; it's a metal. So, so you kind of got, of those two factors that drive gold prices at the moment, it's not so much the haven play that's working, but more the move away from the move into higher yielding assets, or assets that are starting to yield more like just US Treasuries. So technically, we obviously had this long-term inverse head and shoulders pattern. We were looking for the breakout. We kind of edged it, but it just depended on how you drew your trend line, really. If you just lifted it up a bit, missed that middle one, but used this one, we didn't quite get it, and now you can see why we're coming down to that bullish engulfing week. We're coming down to kind of test the entry of that. And if we give this level away, which if I drop down to the daily chart, that's the kind of the bullish engulfing week, if you like. If we get down and take out that engulfing week, then it really, the breakout doesn't look too good at all. It already doesn't look great. We had that bearish engulfing candle here, but it's in the middle of a bit of a kind of mishmash, rangy type conditions. It's not clear cut in the trends. So for me, we'll just have to watch the 13.25 level. If that gives way, then you can expect a kind of bigger down drag in gold, I think, and that top break is off the table for the time being. Finally, just over to Brent crude. Scrolled over a bit here. So we had that bullish engulfing week. It was all looking good for a breakout above the 70 level, but now we've kind of rolled over, and you can see we've kind of got a bit of a gap here on a weekly chart. We can see it slightly better here on the daily chart, as we've had something of a head and shoulders reversal here. We're pretty much breaking down through the neckline of the head and shoulders. We tried to push positive earlier today, and we've rolled over. This is all looking fairly negative for oil. It looks to me like we're going to extend this down move and retest our breakout area down here at the sort of 65 level. So to me, it looks like a 70, a big round number, and we've got a reversal pattern. You know, those two things put together, a big round number and a reversal pattern, to me all point to a further slide in the oil price. So that is about it. That's all the main markets I was looking to cover. Unless anyone had any extra markets, I'm going to call it a day there. Much obliged to everyone for attending today. Good luck with trading for the rest of the week. And that's Jasper Lawler signing out. Cheers, guys.